Hello all, I hope you are well in these extraordinary times. I would like to welcome you all to the Fintech Finance Virtual Arena where we're hosting you today. In this special arena, we're going to be having a little look at payments, customer experience and everything connected with that. Joining me today from Santander, we have got David Bailey. How are you doing today, David?
Not too bad at all. Nice and warm.
Yeah, it is very, very warm today, I've got to say. And also joining me, we've got Andy Renshaw from Feedzai. How are you doing today, Andy?
Yeah, very good. Thank you.
Excellent. First of all, guys, thank you so much for not having the cliched massive bookcase behind you. I feel very much in line. So let's go kind of sort of straight into it. Can I just get you guys to introduce yourselves of who you are and what you look after? David, do you want to head up first?
Sure. Hi. I work in Santander within the payments team. I spend quite a lot of my time thinking about payment strategy, but a lot of my focus is on open banking and what that's going to mean in the future and where we could be partnering, etc., in the open banking space. So that's what I do.
Excellent. And yourself, Andy?
Yeah, work at Fintech as a VP for banking solutions. So I guess what that means is I make sure that the technology we're building and developing is relevant for the banking industry and that we kind of really hit the mark in terms of solutions we deliver for customers and prospects.
Excellent. So we got tech and we got strategy. Perfect. Well, let's look in the first instance at payments and friction. What did the customer expect in the before times, in the pre-pandemic, and what's always been the biggest issue in delivering them? What are we talking about when it comes to the pain point in customer experience for payments? Do you want to take that first, David?
Yeah, sure. Look, I think if we're talking about sort of pre-COVID-19, where quite a lot seems to have changed in the last few months, but pre-COVID-19, I think the reality is customers have a pretty balanced view when it comes to payments. They do want it to be as seamless as possible, but I'm kind of pleased to say that customers are pretty wary of anything that's going to cause them inconvenience or loss of money or anything unfamiliar. So, that's good from a fraud perspective, but, clearly customers want things to be as seamless as possible. But I think in reality, customers make their decisions within kind of milliseconds as to how they're going to pay for stuff. So that's part of the challenge when you try and introduce new things in the payments arena, is it's quite hard to get customers to change their behavior, if you like. And sometimes it needs a bit of a nudge from industry, because customers can be a little bit suspicious of new stuff, especially when it just seems too easy, interestingly. So, if you think about contactless payments, when they first arrived, I think people kind of felt like there must be some sort of catch. And it's only really when there was an industry incentive of free underground travel and people saw nothing bad happened, that really we started to see things ramp up from that perspective. But interestingly, I think people were almost expecting there to be more more friction in the journeys. So I think people are pretty balanced. They want to feel safe, but they do want it to be as easy as possible while still feeling safe.
Absolutely. I think you hit the nail on the head there. I firmly believe that the London Underground is one of the reasons why contactless is so accepted in the UK. Andy, did you want to weigh in on this? What was, again, the expectation of the customer and the biggest issue in delivering it to them?
I think the expectation was that something would change, but the customers weren't necessarily aware how or what would change. So I think that there was this kind of slightly uncomfortable middle ground that probably customers knew something would be different, but perhaps didn't know what that would be. And I think to a certain extent, customers have been exploring that almost on a week-by-week basis. Contactless is a great example with the raising of the limits as well. We've also seen customers just change channel with established relationships. So, there may be customers who haven't been digital or e-commerce users with their supermarkets, for example, but they've now moved to being digital users, and probably what they're seeing is some of that has brought reassurance that actually in many ways that they're recognised, but in other ways maybe it's created a little bit of trying to re-establish trust really has been part of that as well. And I think probably what we've seen is customers trying to do exactly that, trying to check where they can establish trust and where they can offer trust in return. And I think that's probably what we've seen happening over the last few months, really. That, I'd say, exploring that trust element with either with established people, but maybe in different channels, or with new interactions and new companies that they perhaps haven't used before.
So I think there was obviously a massive spike in online payments, e-commerce, especially at the start of the lockdown. And I believe actually Santander was one of the UK banks that was saying, be aware of fraud, be aware that there are, with a lot more online payments. Do you think that across the industry that there's been, since sort of lockdown started, there's been an increase in fraudulent attempts? Or do you think that that's kind of been counterbalanced with the public going, oh, this is kind of new, let me be a bit more cautious?
Honestly, we've definitely seen a lot of different kinds of fraud appearing since lockdown, and from a bank perspective, we really had to be quite careful and continue to encourage our customers to take care when it comes to fraud. Just because there's all sorts of scams that have suddenly appeared. I mean, quite astonishing how quickly the fraudsters sort of picked up on the opportunities that lockdown and COVID-19 have provided. From both from a Santander, from an industry perspective, we've had to certainly be on guard, if you like, and try and help our customers be aware of things that are going on. But the other side of the coin is, clearly we've seen even late adopters to contactless have contactless just taken off, if you like. And to be fair, pre-lockdown, 1 in 4 transactions already was consumer transactions, at least, were contactless, and that skyrocketed even more as a result. And I think in some ways the industry should be quite proud that so quickly the industry was able to get together and push that limit up to 45. And I think that sort of made customers relax a little bit as well using contactless, because in some ways, I think previously there was always a little bit, what's the limit? I can't remember the limit. You know what, I'm just going to dip my card. All the advertising around the 45 limit, and I think has encouraged customers to actually use contactless more. Once again, they've seen nothing bad has happened, and so that's been a really positive thing. But we have to continue to take care from the fraud perspective.
Absolutely. And Andy, do you want to weigh in on this from the fraud perspective?
Yeah, I think David summarised it well. I mean, the way I tend to talk about this is the fraud that's occurring. The typology or the method of fraud hasn't changed, but the language around it has, and I think that's the quick adaptability we've seen. So we know that scams, unfortunately, have become more and more prevalent with customers. We know that more and more customers, especially again in the digital context, but not only in the digital context, are being put under more and more pressure to participate in fraud, and a lot of the messaging out there, but from action fraud, also more recently from people even like which, for example, have started doing weekly scam reports, has been all about adapting to that. So it's not a new type of fraud, it's just fraudsters are really leaping on the weaknesses and the exposure points that COVID has brought. And I think what they've done is they've shifted the narrative around why they're trying to, or how they're trying to scam the customers fundamentally. And I think that's the big shift we've seen. I think as well from an e-commerce and just a general kind of perspective there, we need to be, I don't think we're seeing this yet, but we need to be aware that in a recession or a downturn more broadly, we know that different types of fraud start to come to the fore there. So things like hardship fraud, maybe things like refund, chargeback, claims for non-receipt of goods will start to become prevalent. And I wouldn't say we're seeing that yet, but I think we're aware that as this goes on longer, that those things may come more to the fore, as I said.
In terms of friction, we did one last year, but I was actually the racer myself we put on the payments race, and I travelled from London to Copenhagen using only the contactless ring to pay for flights, food, accommodation. Certainly, interesting in terms of how much you can do through contactless. But at the same time, the whole point was to show actually you kind of need that payment choice. With that in mind, do you think that we're starting to see an aversion to cash, but in a way that isn't leaving people in a financial island where they can't transact at all? Tricky one for you, because obviously we want people to be able to transact, we want people to not be left out, but at the same time there seems to be a bit of a decrease in the acceptance rate of cash.
Yeah, absolutely. It's an interesting thing because clearly the use of ATMs declined hugely during lockdown, and it started to go up again, but we don't see it going back to sort of pre-COVID levels just because people have got accustomed to paying for things in different ways. But I think you're right. There is a risk, if you like, for people who are not accustomed to paying for things in any other way, or manage their money using cash, because a lot of people kind of jam jar using cash. And the truth is I think they're going to have to adapt how they do things, because a lot of merchants just aren't accepting cash anymore. And in particular, and this has been a thing for some time, I've kind of felt quite sorry for charities, etc., that have been reliant over the years of people giving them their small change or whatever. And we've seen a bit of a move for the charity sector being able to take a contactless, take a tap payment, which has been great to see. But I have kind of worried about that going, I hope they can adapt more quickly. And within Santander, we work with a couple of charities to kind of help them start to do that, and start to, take contactless payments as on public transport, etc. But I think there's going to have to be a sort of change in people's behaviour, just because the merchants are going to start to really encourage it.
Absolutely. Well, with such a movement towards online electronic and e-commerce payments, particularly in terms of transaction volume, I would give an analogy, but by the time I finish saying it, it will probably be out of date with the kind of J-curve growth of it. How can tools like AI, nice broad term for you, and machine learning help with managing that transaction volume, both in terms of obviously reconciling, but also in terms of, this thing looks a little bit suspicious? Andy, did you want to take that first?
Yeah, sure. Yeah, I mean, it's a great question. And we know, for example, I think in the last week, I've seen an article from MIT Technology that's been asking exactly that question. Is AI cracking under the pressure of the coronavirus pandemic? I guess from my perspective, kind of working in Fintech, there's probably a few kind of words of encouragement. And fundamentally, machine learning models still look at individual behavior on whether that is normal or not, and they're used to doing that, certainly from our perspective, with huge volumes, and that may be just general peaks that you see, for example, monthly paydays, for example, or that may be more of the kind of things that we've generally seen over the last few years, like Black Friday, Cyber Monday, the last shopping day before Christmas, etc., etc. So in many ways, although the coronavirus pandemic is unique in terms of the length of its occurrence, some of the underlying principles behind it are not unusual for machine learning models. And fundamentally, what we've seen is that they stood up very well, and our models have been able to stand up very well to the challenges, because although customers are behaving in a slightly different way, the transactions they are doing are still relatively normal. They're still using merchants that they used to use before. They haven't suddenly started using a whole new cohort of merchants that they used before. And where they're still making high value payments, that's still the case. And where they're still making low value payments, that's the case. So in that sense, when you look at the level of normality, it's still very, very high. And I think the second part of the machine learning model is obviously looking for anomalies or fraud behaviors and things that are kind of more outliers. And probably, as I referenced kind of earlier slightly, fraudsters are still in many ways committing the same types of fraud. Those transactions still look unusual relative to normal behavior. So although kind of almost the mix within the normal has changed, what we still see is a significant differentiation between what a fraudster does and what a typical customer does on a day-to-day or a week-by-week basis. And because of that, probably what we've seen is actually a stronger stability and probably a more stable machine learning and AI performance than probably we originally feared right at the start. And that's kind of stayed consistent throughout, that's that ability to segment and separate the bad from the good.
David, onto yourself. So in regards to the kind of the scale and the use of AI, what are some of the, is that something that is quite useful?
Absolutely, and increasingly we're looking towards machine learning and AI to, particularly on financial crime and fraud, to help us identify patterns of behavior, etc., that we would deem as suspicious. It's always been in a sort of complementary fashion for the existing tools that we use, and in particular we've always had to kind of combine that with quite a lot of human interaction and human intuition in terms of figuring out what we should be directing the machine learning capability to do, and what we do with the outputs of it as well. So there's definitely kind of ongoing human intuition and interaction required. And I think the other thing, just from a banking perspective, and Andy will know this well, when you're integrating sort of machine learning into a highly regulated environment where everything has to be auditable, it has to be clear rationale for any decisions taken, etc., and any outcomes, if you like, that makes it a little bit slower to integrate some of these things. But I think there's no doubt that machine learning and AI is the way forward to help us cope with just increasingly sophisticated fraudsters, and it's not going to get any easier. So we have to continue building our capability.
With all that in mind around the AI and machine learning and friction within payments, for me, I want zero friction at all. I'm relatively happy that if I literally say pay now, it happens instantly like that. Fantastic. For my gran, she would, if that happened to her, she would freak out. She'd think that's gone a little bit too quickly. Actually, probably the same for my wife. She'd probably freak out a little bit there as well. How do you think there's a need to have almost some artificial friction put in? And is there scope to have that almost personalized for each individual customer or each individual transaction? What's the do you think people almost need that level of a certain amount of friction in there to give them the peace of mind against fraud?
That's a really interesting question, because the reality is for many people, they expect there to be a level of friction in the journeys that they see. And it's like, the analogy is you kind of lock your front door, right? And everybody locks their front door because they want their home to be secure. And I think people feel the same way about their finances. So they do want a level of friction to be, or they expect to see a level of friction included in their journeys. Although they're happy to remove the friction when it's a very trusted brand. Okay, so then they're very happy to say, I'll leave my card on file with you, but if it's somebody new, then people will be naturally quite hesitant to do that. And I think the reality as well is, legislation is pushing us towards more security as well. So actually, where there's been friction in the past, we're actually starting to see a little bit more friction.
Oh, good.
Which is kind of interesting, and for the most part, I think people are okay with that. But what I see coming from an open banking perspective is there's opportunities for there to be less friction, because while there's not been huge take-up of open banking payments so far, if you look at some of the journeys now, they're actually becoming really quite slick. And if you kind of think about some of the big digital platforms that could start to use open banking in a very frictionless way compared to what they may have to be doing for cards, I think there's real potential for friction to start to be removed in those journeys. where people trust the brands and where people are happy to to play in a less friction environment, if you like. So have we ever thought about differing friction for different customers? I'm not aware of us ever thinking about it that way. I think that'd be quite hard to manage, but it'd be interesting to see if Andy has a view on that as well.
Yeah, I've probably got a couple of thoughts. I agree with everything said. Probably the first is, I think we tend to think about friction as though customers are intervening, but certainly kind of my experiences in the past was actually a lot of it was just actually about telling customers what you were doing. So I was actually fortunate to participate in one app launch where payments happened too fast, and actually the request for customers was to actually tell them through the payment phases that we were actually doing security checks. So the customer didn't have to do anything different, but actually just informing them and going a little bit slower and effectively saying, please just wait a few seconds whilst we conduct some checks in the background, actually added a huge amount of reassurance. So I think there's friction in terms of intervention, but you can also do it in quite a passive and informative manner as well. And then, yeah, I guess kind of to the point around choice, I think we are just starting to see the little acorns of this, the little start of this, aren't we? You know, especially with some of the challenger banks, maybe that they've brought things like the ability to turn off gambling transactions, for example, or the ability to maybe turn off international transactions. Maybe we haven't thought about those as friction, but I think maybe things like card controls or certain payment limits that customers could set could be viewed as actually the customers starting to choose where they're okay having friction and where they're not through control and proactive choice. So generally, I don't think we're seeing, differentiated where, person A has a different journey to person B, but we are just starting to see these things around choice and just that ability for them to actually set some of the limits on the customer side rather than the bank side. So that might be an example where some differentiation occurs.
The reason I asked that around a huge amount of different customers, and again, if you could, and again, hypothetically, it'd be a hell of a project where you could personalize friction. If you were doing that for each individual customer, that must leave you relatively exposed for fraud if you're doing it at that kind of scale?
I guess yes and no. I mean, in some ways, the choices that people made would actually be useful data and in essence, a lead indicator. So customers who had chosen, high levels of friction or had chosen certain transactions not to participate, you would argue in many ways actually are easier to protect. On the flip side, those that are more permissive or have chosen to remove friction, that might be where you choose to focus your machine learning models and your rules on a day-to-day basis. So in many ways, actually, it could actually help you segment your customer base and be more targeted in your strategies.
I think there could be some complexity around where customers have chosen a level of friction and they get something different because of fraud rules that are in place, or because the transaction has been highlighted for a reason, and also some complexity around liability. I think you need to be very aware of as well. So yeah.
Well, the last couple of things I want to touch on, we got to look at the future. Obviously, a little bit in flux. I'm going to use the U word, unprecedented times. But let's just assume that there is a lot more physical POS than we're experiencing at the moment. Do you see things like, obviously, Amazon Go models being the future? And when it comes to e-commerce and online payments, what are some of the tools that we're going to be experiencing at the kind of scale that is going to be required?
I suppose to answer your question around the Amazon Go model, the way I often think about these sorts of things is I think change will be bigger than people expect, but will be slower than people expect. So I think there's a real potential for that model to appear in the future, but I think it will happen quite slowly. And I'll just give a personal example. So I've started using the filling station apps when I fill up, just because I don't have to go into the shop, etc. But I still feel this compelling need when I filled my car and paid for it on the app to kind of wave my phone at the attendant before driving away, because I just feel really uncomfortable with the thought of just driving away without paying, if you like. And I know they get a notification, but I still want to wave at the person, if you like. And I think it'll take some time for consumers to get over the thought of just walking out without paying. So I think that, you know, that sort of thing will definitely come, and we will see payment journeys or payments as part of broader journeys become much more integrated in a way that feels much more seamless to the customer. And I think we're going to see that more and more, particularly within big digital platforms and marketplaces, etc. Transport, increasingly, it'll become much more seamless. I think there's potential for it to be seamless. But even other things like micropayments for media consumption, if you like. And if you think about the media, that's a really challenging model for many media companies. And they're probably going to need to get to a point where they can take micropayments for content instead of continuing to rely on the advertising model. So it'll be interesting to see whether things like that happen, but it'll be bigger than we expect, but it'll be slower than we expect, I believe.
Also, I'm not sure, because I looking at Uber, for example, I have more often than not found myself, whenever I've taken a black cab, hopping out and going, oh god, this isn't an Uber, and going back in to go and pay them, because I've kind of almost gone the other way. I forgot, this is not this is one of the old school ones.
Yeah, you're right. You know, and as always, these things will just take adjustment for people to get used to, and once again, will probably take an industry to push things, or at least some of the big brands to really get people comfortable and incentivizing people to adapt their behavior and change their behavior to the point where they can see nothing bad happens, the payment happens, and the police don't chase them down the road, kind of thing. So yeah, it'll take time, but you know, definitely there'll be progress. And I hope to see as well, you know, and partly because I'm involved in open banking, I kind of hope to see, you know, the traction starting to really occur in the open banking space. And once again, customers just don't know enough about it, but we're starting to see a bit of growth in open banking, for instance, in the charity sector, etc. And I think there's real potential with an open banking to remove some of the friction. So, yeah.
Excellent. Andy, on to yourself. What's your viewpoint on obviously the likes of the Amazon Go POS model, but also what are the tools that we're going to be using to roll this out at a big scale?
Yeah, I mean, we're definitely seeing the conversion of, you know, social, if you like, social devices, be that things like social media payments. I mean, we talked about micro payments. We know, you know, people like WhatsApp, for example, are experiencing, and, you know, various kind of chatbots are experimenting with those globally. So we're definitely seeing this convergence of digital social interaction with digital financial interactions, and we know that the phone more generally is becoming more and more homogenized as a payment vehicle. Those things are only going to continue in the low value payment side, and I think it's interesting, the examples we tend to touch on are in the relatively low value payment side. So I think more and more we're going to see cash kind of almost be removed and these micro payments be made in very, very simple fashions. I think it's slightly different when you go up to higher value payments or deeper transactions, or transactions where you expect to have a long-term relationship. So for example, maybe you're buying a car and you know, you're going to be going back to that dealership on an annual basis. Is that something that you're comfortable doing using a relatively, you know, contact-free payment? I'm not so sure, and I think that's probably where Dave is saying it's going to be slower to happen, because I think in many ways it will grow from the bottom upwards. A couple of other things, I think, you know, we're seeing more and more the wallet type or the membership type model is definitely taking off. This idea of people having their payment details registered with somebody they trust, and that then being the vehicle for payment because they've already established trust there. I think that will continue to be true. I'm not sure when we make a payment with Uber, it's because we trust Uber. I think it's because it's commoditized and easy. But as I say, as payments get larger, maybe doing that with a vehicle you trust that is virtual will become key as well. And that'll probably go right back to the start. One of the things we talked about was budget management, and one of the problems with cash being removed will be budget management, because people are used to taking out, some people are used to taking out their money one day of the week, and that lasts them for a week, for example. So actually, I think people who can step in and actually help people manage their budget and actually help give them transparency around where this virtual money or this virtual spend are going, I think could be very successful. And my hope is actually that open banking could present an opportunity in that space where people can actually have their budget managed as well as their payment convenience. And those two things coming together, I think, could be a powerful proposition.
Absolutely, that's a solid statement though. I like that a lot. I mean, the hardest thing, the technology is there, the financial incentive is there. It's the social. That's getting people to change their behaviour. The pandemic's kind of shown that pretty well, that it's pretty tricky. Guys, thank you so much. We're out of time now, but thank you very much for joining us today. Where can we find out more about you?
Yeah, certainly on LinkedIn, my details are there. Anybody wants to reach out and have a partnership conversation, we're always happy to have a conversation and explore ideas and partnerships.
Brilliant, excellent. And Andy?
Yeah, so LinkedIn as well, if people want to make contact, that's absolutely fine. And also feedzai.com, we run an active blog series there. So there's not only information about what Feedzai does as a company, but there's also an ongoing blog series there around how we're adapting to the pandemic and the trends that we're seeing.
Brilliant, excellent, cool.